Thursday, Bitcoin recovers to the $96,000 level. Former Cantor Fitzgerald CEO and crypto advocate Howard Lutnick is confirmed as Commerce Secretary. And Nicolai Crivelli of NextBridge discusses how the uproar over Argentine President Javier Milei's crypto promotion might weigh on meme coins. Bitcoin bounced back about 1.8% above the $96,000 mark. Ether rose nearly 3% to 27.11, and XRP jumped 6% and traded at 264. Okay, one quick story we want to catch you up on. The Senate has confirmed Howard Lutnick as Commerce Secretary. The former CEO of investment firm Cantor Fitzgerald was confirmed with a 51-45 vote and marks yet another win for the crypto industry. Lutnick spoke at the Bitcoin 2024 conference in Nashville, where he compared Bitcoin to gold and hailed Tether for its reserves. Lutnick will now join Treasury Secretary Scott Bessent, Attorney General Pam Bondi, and others in the Trump administration to make up the President's Crypto Task Force. That group was established in a January executive order and aims to explore the feasibility of a Bitcoin stockpile or reserve here in the U.S. And jumping to the uproar out of Argentina after the country's president promoted the Libra cryptocurrency. For our main story, I spoke with Nicolai Crivelli, founder of NextBridge, about whether the controversy surrounding President Milei's crypto promotion could dampen adoption in the region. So I want to start with the situation in Argentina because there is growing concern around the promotion that President Javier Milei gave to Libra token, which its claimed co-creator, Hayden Davis, is now under fire for as well. What's your reaction to the concern there?
Look, you're asking this to a regulated digital asset issuer coming from traditional finance, where everything follows strict rules. So the answer for me is pretty straightforward. This is what happens when you invest in unregulated digital assets without the right information or the skill to do proper due diligence. We need to remember that the crypto market is still very young, and a lot of people doesn't really understand the difference between meme coins, NFT, Bitcoin, or regulated assets. And when you mix that lack of understanding with the hype around new projects like the Libra token in Argentina, or the pump and dump schemes that we have been seeing lately, that's what happens. So that's a challenge. Decentralized finance is meant to be open to everyone, but with minimal barriers to entry, there is also less protection. And of course, this what happens in that cases hurts confidence in the whole industry. But let's be clear, the problem is not blockchain technology itself; it's how people choose to use it. So I'm a regulated asset manager in El Salvador, and here, for example, we have very clear rules, and this could never happen. If you want to issue a digital asset in El Salvador, you have to prove you have the right expertise, follow strict internal policies, create public term sheets, and have your own offering reviewed by independent certifiers. And only after all that, the regulators step in and give final approval. So this kind of structure makes it almost impossible for bad actors to enter the market. And of course, no system is perfect, and investors still need to do their own research, but a mix of good regulation and better education is what will help the market mature in a healthy way. So these things happens when you don't have clear regulation and you give the opportunity to every actor to basically create and sell unregulated tokens into the market.
And to that point about this not being an issue with the blockchain, but rather the actors involved in it, I want to ask about reporting from CoinDesk that we got today, where Hayden Davis reportedly said that he paid the Argentine president's sister to get him to do whatever he wants. And we haven't confirmed this to be clear, but I want to know, does the crypto situation in Argentina perhaps dampen the meme coin craze that we've seen in recent months? And does it reflect concerns that some have raised about their lack of regulation or guardrails?
Well, I don't know exactly if this is right or not, but in general, I think regulation it's very important, and Argentina is basically moving forward in that sense because they are basically talking with Salvadorian authorities to understand how they created the digital asset law, and they are basically created their own legal framework. So I think this will be fixed soon. And but in the meantime, like I said, this thing can happen, and there is no way to avoid it without regulation.
Okay, so let's talk about the broader environment of crypto in Latin America, starting first with adoption. El Salvador has been a major hub for crypto in the region. How is that going, and what has the public reaction been to this integration of digital currencies into the mainstream economy?
Adoption in general worldwide is still very low. And you can imagine that in emerging markets like El Salvador, people are not used to understand technology or Bitcoin. So this is more short-term opportunity for a company like NextBridge, which are digital asset issuers, to help local companies or also local investors to participate in their local economy by using technology like tokenization. And asset tokenization is a game changer, for emerging markets, because many of these countries struggle to attract liquidity, because traditional financial system can be complex or simply not accessible. But by tokenizing real-world assets, we can break down these barriers and make it easier for global investors to participate. And furthermore, in places where inflation is high or the local currency is unstable, tokenized assets provide a way for people to preserve their wealth while actively contributing to their own economy. Imagine being able to directly invest in a local business without needing a traditional bank account. So in that sense, adoption rate in El Salvador, because I'm here, so I can talk about what I'm seeing here, it's not so high, but a lot of people are using Bitcoin to execute daily payments or to store some value. So in general, I think it will take time for emerging countries to adopt Bitcoin or other assets to being used every day. But I think it's the right way to balance what I just asked before.
So one of the big claims from the crypto industry was that it would provide financial independence for some of these countries, but now you've got the U.S. looking at becoming a major holder of cryptocurrencies like Bitcoin. Does that at all affect the calculus for these countries, or does it accelerate their adoption as well?
I think they will accelerate adoption as well. El Salvador was the first country in the world to adopt a national Bitcoin reserve. Now, United States are evaluating to or explore to do the same. And after that, in El Salvador, the digital asset law came in place. Digital asset law is basically a law that regulates the digital asset ecosystem in El Salvador, and they have a independent regulator body. And I think the United States, for example, will do the same. So when you take this kind of decision, of course, you are also creating a new ecosystem when you can change roles and improve adoption. So I think this will drive adoption not only of Bitcoin or digital asset in general, but also of tokenized assets worldwide.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.